You think you know how much you're taxed? Think again. The average American pays over 40 different types of taxes throughout the year, most of them hidden. Every time you buy a coffee, fill up your gas tank, get paid, or even die, the government takes a cut. By the end of this video, you'll understand exactly how much you're really paying and where all that money actually goes. Let's break down every major tax in America, from the ones you see on your paycheck to the ones hiding in plain sight. Federal income tax, the big one. Federal income tax is the monster everyone knows about. It's the largest tax most Americans pay and the biggest source of revenue for the federal government, bringing in over $2 trillion annually. Here's how it works. The United States has a progressive tax system with 7 brackets: 10%, 12%, 22%, 24%, 32%, 35%, and 37%. But here's the part most people get wrong. If you're in the 22% bracket, you don't pay 22% on all your income. You pay 10% on the first portion, 12% on the next chunk, and only 22% on income above a certain threshold. For 2025, a single person pays 10% on the first $11,925 they earn. If you make $50,000, you're not paying 22% on all $50,000. You're paying 10% on the first chunk, 12% on the next chunk, and 22% only on the portion above $47,150. This is called marginal taxation, and understanding it can save you from making terrible financial decisions, like refusing a raise because you think it'll push you into a higher bracket. Your effective tax rate, what you actually pay overall, is always lower than your top bracket rate. The federal government collected over $2 trillion from individual income taxes in 2024. That money funds everything from the military to national parks to federal courts. But it's just the beginning of what you pay. State income tax. It gets worse. On top of federal taxes, 42 states charge their own income tax. 8 states charge nothing: Alaska, Florida, Nevada, South Dakota, Tennessee, Texas, Washington, and Wyoming. New Hampshire just eliminated its tax in 2025. If you live in one of these states, congratulations, you're dodging a major expense. If you don't, you're paying state income tax on top of federal, and the rates vary wildly. California has the highest top rate at 13.3% for high earners. Some states have flat taxes where everyone pays the same percentage. Illinois charges 4.95% whether you make $30,000 or $3 million. Other states have progressive systems like the federal government. The key thing to understand is this: state income tax is in addition to federal tax, not instead of. If you're in California making $200,000, you're paying federal income tax and California income tax, meaning your combined top marginal rate could exceed 50% once you add in other taxes. This is why some people and companies flee to states like Texas and Florida with 0 state income tax. The difference in your lifetime earnings can be millions of dollars, depending on where you live. Payroll taxes. The stealth tax on your paycheck. Look at your paycheck. See that line that says FICA? That's payroll tax, and it's huge. FICA stands for the Federal Insurance Contributions Act, and it funds Social Security and Medicare. The rate is 7.65% of your wages, broken down as 6.2% for Social Security and 1.45% for Medicare. But here's the trick. Your employer also pays 7.65% that you never see. The total payroll tax is 15.3% of your wages, split between you and your employer. Economists argue that you're actually paying the full 15.3% because employers factor their portion into how much they're willing to pay you. If they didn't have to pay payroll tax, they could afford to pay you more. For Social Security, there's a wage cap. In 2025, you only pay the 6.2% Social Security tax on the first $176,100 you earn. Anything above that is exempt from Social Security tax, which means high earners pay a smaller percentage of their total income to Social Security than middle-class workers do. This is one of the most regressive parts of the tax code. The Medicare tax has no cap. you pay 1.45% on all wages forever. If you make over $200,000 as a single filer, you pay an additional 0.9% Medicare surtax, bringing your Medicare tax to 2.35% on high earnings. Payroll taxes brought in over $1 trillion in 2024, funding Social Security checks for retirees and Medicare for seniors. The problem? Social Security is projected to run out of money by the 2030s unless Congress raises taxes, cuts, benefits, or both. Sales tax. Death by 1,000 purchases. Sales tax is the tax you see every time you buy something, except when you don't see it because it's already built into the price. 45 states charge sales tax. The 5 without it are Alaska, Delaware, Montana, New Hampshire, and Oregon. Sounds simple, but it's a nightmare. States set their own rates, counties add their own, cities add more, and special districts pile on even more. The result is that sales tax can range from 0 to over 10%, depending on exactly where you're standing when you buy something. Tennessee has the highest combined state and local sales tax at nearly 10%. Louisiana and Arkansas are close behind. But even within states, rates vary by city. Chicago's combined sales tax is over 10%. Rural Illinois might be 6%. What makes sales tax regressive is that poor people spend a higher percentage of their income on taxable goods than rich people do. If you make $30,000, you probably spend most of it on food, clothes, and necessities. If you make $3 million, you're investing and saving most of it, so sales tax hits a much smaller portion of your income. Some states exempt groceries and medicine to reduce the burden on the poor, but many don't. Sales tax raised over $400 billion for state and local governments in 2024. It's reliable revenue because people always need to buy things. But it's also invisible enough that politicians can raise it without as much backlash as income tax increases. Property tax. Rent you pay to own your home. You own your home, right? Wrong. You rent it from the government. Property tax is what you pay annually to your county and local government based on the assessed value of your property. Stop paying it and see how long you own your home before it's seized and sold at auction. Property tax rates and assessment methods vary wildly by location. New Jersey has the highest average property tax at over 2% of home value annually, meaning a $500,000 home costs over $10,000 per year just in property tax. Hawaii has the lowest at around 0.3%, but within states, counties set their own rates. Cook County in Illinois has some of the highest property taxes in America, while rural Illinois counties charge far less. Here's the scam. When home values skyrocket, your property tax bill skyrockets, even if your income doesn't. Your house is worth more on paper, so you owe more tax, even though you're not making more money and you're not selling the house. Seniors on fixed incomes get crushed by this. Some states have homestead exemptions or tax caps to protect people, but many don't. Property taxes raised over $600 billion in 2024 for local governments. It funds schools, police, firefighters, roads, and local services. The problem is that it creates massive inequality. Rich neighborhoods with expensive homes generate huge property tax revenue for great schools and services. Poor neighborhoods generate less revenue and get worse schools and services, perpetuating the cycle. Excise taxes. The sin taxes and hidden fees. Excise taxes are specific taxes on specific goods. You pay them whether you know it or not because they're usually built into the price. The big ones are gasoline, alcohol, tobacco, and increasingly, marijuana. The federal government charges 18.4 cents per gallon on gasoline and 24.4 cents per gallon on diesel. These rates haven't changed since 1993, which is why the Highway Trust Fund is running out of money as inflation erodes the value. States add their own gas taxes on top, ranging from under 10 cents per gallon in Alaska to over 50 cents in California and Pennsylvania. Every time you fill up your tank, a huge chunk is taxes. A $4 per gallon gas price might include 70 cents in federal and state taxes. Tobacco is taxed heavily at both the federal and state levels. The federal government charges $1.01 per pack of cigarettes. States add anywhere from 17 cents per pack in Missouri to $4.35 in New York. If you smoke a pack a day in New York City, you're paying over $5 just in taxes per pack, over $1,500 per year in cigarette taxes alone. Alcohol is taxed based on type and alcohol content. Beer is taxed at about $18 per barrel federally. Wine ranges from about $1 to $3 per gallon. Distilled spirits are taxed at $13.50 per proof gallon, which means higher alcohol content means higher tax. States add their own alcohol taxes with wild variation. Washington state charges nearly $37 per gallon on spirits, the highest in the nation. New Hampshire and Wyoming charge essentially nothing because they run state liquor stores and make money from the sales instead. Marijuana is taxed by states that have legalized it, with rates ranging from a few percent to over 30%. Colorado, Washington, and California collect hundreds of millions per year from marijuana taxes. Excise taxes raised about $90 billion federally and billions more for states in 2024. The justification is that these taxes discourage harmful behavior like smoking and drinking, while making users pay for the societal costs their choices create, like healthcare for lung cancer and drunk driving accidents. Critics say they're regressive because poor people are more likely to smoke and spend a higher percentage of income on gas, so these taxes hit them hardest. Capital gains tax, how the rich pay less. Here's where the system gets rigged. If you work for your money, you pay income tax at rates up to 37%. If your money makes money, you pay capital gains tax at much lower rates. Capital gains are profits from selling investments like stocks, bonds, or real estate. If you buy a stock for $10,000 and sell it for $20,000, you made $10,000 in capital gains. How much tax you paid depends on how long you held it. Short-term capital gains, for investments held less than a year, are taxed as ordinary income at your normal income tax rate. But long-term capital gains, for investments held more than a year, get special treatment. The rates are 0%, 15%, or 20%, depending on your income, far lower than the top income tax rate of 37%. If you're a single filer making under $47,025, you pay 0% on long-term capital gains. From there to $518,900, you pay 15%. Above that, 20%. This is how billionaires pay lower effective tax rates than their secretaries. Warren Buffett famously pointed out that he pays around 17%, while his secretary pays over 30%. His income comes from investments taxed at capital gains rates. Hers comes from wages taxed at income tax rates. There's also the step-up basis loophole. If you buy stock for $10 and it grows to $1 million, but you never sell it, you never pay capital gains tax. When you die and leave it to your kids, their basis steps up to $1 million. If they sell immediately, they pay zero tax on the $990,000 in gains. The wealth is transferred tax-free. Capital gains tax raised over $200 billion in 2024. But it's concentrated among the wealthy since most Americans don't have significant investment income. Estate tax and gift tax, taxing death and generosity. The estate tax, also called the death tax, is a federal tax on the transfer of wealth when you die. The good news is that most people never pay it. The bad news is that it exists. For 2025, the federal estate tax exemption is $15 million per individual. $30 million for married couples. Only estates worth more than this amount owe federal estate tax, and the rate is 40% on the amount over the exemption. If you die with a $20 million estate, the first $15 million is exempt, and the remaining $5 million is taxed at 40%, meaning your heirs owe $2 million. Only about 0.1% of estates owe federal estate tax because so few people have estates over $15 million. Some states have their own estate or inheritance taxes, with much lower exemptions. The federal government also has a gift tax to prevent you from avoiding the estate tax by giving everything away before you die. You can give $19,000 per person per year tax-free in 2025. Anything above that counts against your lifetime estate tax exemption. If you give someone $1 million, that's $981,000 over the annual exclusion, reducing your estate tax exemption by that amount. The estate tax raised only about $30 billion in 2024 because so few people pay it, but it's politically controversial. Opponents call it double taxation, since the money was already taxed as income before being saved. Supporters say it prevents the creation of hereditary aristocracy by taxing concentrated wealth transfers. Corporate tax. Who really pays it? The federal corporate tax rate is 21% on profits. Sounds straightforward until you realize corporations don't really pay taxes, they just collect them. When a corporation owes tax, it passes the cost to some combination of customers through higher prices, workers through lower wages, and shareholders through lower returns. Economists debate who bears the burden, but everyone agrees corporations themselves don't suffer. People do. Many massive corporations pay little or no federal income tax despite making billions in profits. They use deductions for depreciation, investments, losses carried forward from previous years, and offshore profit shifting to reduce their taxable income to zero. Amazon paid zero federal income tax in 2018 despite $11 billion in profits. The corporate tax raised about $400 billion in 2024, only about 9% of total federal revenue. It used to be a much bigger share, over 30% in the 1950s, but the rate has dropped and deductions have multiplied. States also charge corporate income tax, ranging from zero in states like Nevada, South Dakota, and Wyoming to nearly 12% in New Jersey and Iowa. Other taxes you didn't know you're paying. There are dozens of other taxes hitting you constantly. Unemployment insurance tax is paid by your employer based on your wages, funding unemployment benefits when people lose jobs. The Federal Unemployment Tax Act charges 6% on the first $7,000 of each employee's wages. States charge additional unemployment taxes. Tariffs and customs duties are taxes on imported goods. When the government slaps a 25% tariff on imports from China, American companies and consumers pay that tax, raising prices on everything from electronics to furniture. The tariffs imposed in 2025 alone are projected to collect hundreds of billions annually. Telecommunications taxes include the Federal Universal Service Fund fee on your phone bill, funding rural internet and phone service. It's currently around 34% of your interstate call charges. Various license fees and permit fees function as taxes. Vehicle registration, driver's licenses, professional licenses for doctors and lawyers, building permits, all are taxes by another name. Toll roads are effectively driving taxes, charging you for road use beyond what you already paid in gas taxes. Airport fees and taxes add up to over 20% of some airline ticket prices. Hotel occupancy taxes hit travelers, often over 15% in major cities. The list goes on. Fishing licenses, hunting licenses, pet licenses, and all taxes. The total tax burden, adding it all up. So what's the total? The average American household paid about 24% of its income in total taxes in 2024. When you add federal income tax, state income tax, payroll taxes, sales taxes, property taxes, and everything else. But this varies massively by income. Low-income households pay a smaller percentage in income tax, but a larger percentage in payroll and sales taxes, which are regressive. High-income households pay a larger percentage in income tax, but benefit from capital gains rates and various deductions. The Tax Foundation estimates that Tax Freedom Day, the day when Americans have earned enough to pay all federal, state, and local taxes for the year, falls around mid-April. Before that date, every dollar you earn goes to the government. After that date, you get to keep it. The United States actually has a lower total tax burden than most developed countries. Denmark, France, and Belgium collect over 45% of GDP in taxes. The US collects about 27%. But Americans also get fewer government services, no universal health care, limited public transportation, less generous unemployment benefits, and retirement pensions. You pay less in taxes but more out of pocket for things other countries provide. Where does it all go? The federal government collected over $4 trillion in 2024. Where did it go? Social Security took over $1 trillion, about 23% of the budget. Medicare and Medicaid took another trillion and change, about 25% combined. Defense spending was around $900 billion, about 13%. Everything else, from education to infrastructure to national parks to the FBI, divides up the rest. Interest on the national debt consumed over $600 billion, and that number is rising fast as debt grows and interest rates stay high. State and local governments collected over $2 trillion combined. Most of it went to education, public safety, like police and firefighters, and infrastructure, like roads and water systems. The problem is that the government spends more than it collects, running massive deficits that add to the $34 trillion national debt. Eventually, those deficits have to be paid for by raising taxes, cutting spending, or inflating the currency to make the debt worth less. Taxes are the price we pay for civilization. Without them, there would be no military protecting the country, no courts enforcing contracts, no roads connecting cities, and no public schools educating children. But the tax code has grown into a monster of complexity, with thousands of pages of rules, loopholes for those who can afford lawyers and accountants, and hidden taxes that most people don't even know they're paying. Every politician promises to simplify the tax code and make it fairer, but it never happens because the complexity benefits those with power and money. The rich can hire experts to minimize taxes legally. Corporations lobby for loopholes. The middle class gets stuck paying full freight because their income comes from wages that are automatically reported and taxed. Understanding taxes doesn't make them less painful, but it does make them less mysterious. You now know that when you see a politician promising to cut taxes, you should ask which taxes, for whom, and what services get cut to pay for it. You know that the person next to you might be paying a completely different effective rate depending on whether their income comes from wages or investments, whether they own property, and what state they live in. And you know that the system is designed to be complicated, because complexity hides how much you're really paying and who benefits from the current rules. The question is whether Americans will demand a simpler, fairer system or continue accepting a tax code that most people can't understand and that consistently favors those at the top.